Is it on? Your account professionals.
All right. Thank you to those who have tuned in. Appreciate your patience.
We'll have to go in and trim that YouTube version later. So we're just going to dive right in here. Good morning, everybody. Jacqueline Clement, Sarah DeBoer, Jessica Menard here for our first time homebuyer mini series, episode 1. Today we have our special guest, April and June from Mortgage Simplicity. And they are going to be our experts today to help guide all of our first time buyers through the big question, where to start, right? So before we dive into the really good stuff, we're going to give you guys a quick rundown of what's happening in the real estate market here in Orangeville and Shelburne, because it's actually been pretty hot. Orangeville, these ladies will discuss, has been on fire. Shelburne has not been as hot. I feel like it's coming because Orangeville's inventory is really lacking. We did have 13 sales compared to 10 last month. 32 days on market. Towns on average are 710. Now semis shot up 47%. That looks like a really alarming number, but it's because a lot of the newer properties, like the 2-year-olds over in Highland Village, have come up for sale, as compared to like the older 30 to 50-year-old semis. So semis on average are 747, which is huge. First time I've seen them above a town price in a long time. And detached in Shelburne is now sitting at 835.9.
Awesome.
Yeah.
Well,
Super quick. I told you I'd be fast.
Yep, we're just rushing through here today. And then moving over to Orangeville, we thought we'd take out Dufferin County today, just because Orangeville's really encompassed that, and we want to talk to the ladies to get all of the juicy stuff. So if you want to go over the numbers for Orangeville.
Yeah, when Jacqueline just said things have really heated up, we actually saw more sales than active listings on the market. So we're currently sitting at about 3 weeks worth of inventory. Which, as we know from the past, that's just going to put upward pressure on prices, and we're all predicting that we're going to start to see that climb. Yeah. The transactions that have happened over the last couple of weeks, there have been multiple offers, but things have stayed pretty close to within 99 to 100% of list price, maybe a little bit over. Yeah. But if we don't get more inventory on the market, it's inevitable.
It's the trickle effect, right?
Yeah.
And I think we also need to make sure that everybody is aware you're going to start hearing about multiple offers again. Multiple offers aren't the COVID bubble offers. They're not the 100,000, 200,000 over. We're seeing like 1,000 over, maybe 5,000 over.
And still conditions.
Still conditions are being accepted. Definitely do want to make sure we highlight that if you have a home to sell and you want to buy, because things are moving so much faster, you may want to start shifting to looking at having your house on the market or that sort of avenue, not just assuming that you can buy and put the condition in of selling your home just because of how quickly things are moving and the buyers are there, they're ready to buy. So I'm not sure if you guys are seeing that on your side.
Yeah, definitely. Lots of movement, multiple offers, and yes, conditions, which is good for first time buyers. Gives them an opportunity, unlike back in 2021.
Yes,
you basically gave everything and accepted what you accepted.
It was very difficult. Average price is still down year over year. We're hovering around the 15% mark, but we're up almost 10% month over month in terms of all properties. Detached, we're just around 950, semis 686, and towns 775. Again, the towns that are selling are those newer build towns, so that's why we're seeing the prices actually surpassing semis. And that's it. The other thing I just wanted to note is we have that GTA movement also really starting to impact our market here again. I feel like that kind of settled a little bit once we started seeing all the rate increases in terms of just like our market, like the transactions just kind of died down. Now that things are fueling back up again, because those markets are even hotter, they're getting those resale prices that are then allowing them to do that northern move and still get pretty good bang for their buck. So that again is also going to help to keep pressure on our prices too.
And we also mentioned that rules starting to pick up again and just
my mind.
So you're getting a lot more people like coming up from the city and not seeing 12 feet of snow, and they're like, oh, like this is great. I have all this property to play on and beautiful gardens and stuff. So definitely a good season for anybody rural.
I think that correlates into too, like we talked about conditions, right? No one wants to buy a rural property without conditions.
Yes.
You have no idea what you're buying. Is the septic good? Is it not? So I think that's kind of like a trickle effect of everything else that's happening and the stability of the market right now that's causing rurals, the prices are a little more appetizing.
Yeah,
Right?
Yeah.
And you can actually thoroughly check out the property. And
Yep.
know what you're getting into.
100%, good point.
Yeah, so if anyone has any questions about market stats, shoot them in the chat. Otherwise, we're gonna jump into stuff with our guests here.
So first, before I started on grilling you about guiding first-time homebuyers, I just wanted to give you the opportunity. Let us know you have some pretty important news recently, and I just wanted to give you guys a chance to talk about that and kind of the process that led you to where you are now.
So our big news would be that we did start our own brokerage called Mortgage and
Goosebumps, congratulations.
Yeah, so that's super exciting. We're starting small, but April and I have been working together alongside since, I guess, the last 4 years. So we teamed up, much like you guys. And
So was it because you met and it was like April and June?
it was just meant to be at first sight, and the rest is history.
We have to make it.
Yeah.
We're just still looking for May.
I'll change my name.
There's a May out there.
If there's a May out there,
They
please
do.
feel free to call us.
Or March.
Yeah. There's no room. Yeah, but no, it's exciting. We have a few agents under our brokerage already, and we will be looking to add some more, but we just want to grow slowly.
That's awesome, guys.
And how can people find you? Because you are still kind of
In transition.
We are definitely still in transition.
So we're gonna keep our branding like Mortgages with April and June is still gonna be us. That's gonna be our like business of our book, basically. So like our realtor partners and our clients, everyone that we work with. And then Mortgage Simplicity is gonna be more like a brokerage where other mortgage brokers are gonna work with us. So it's kind of like Century 21. That's
Okay.
Right.
what we are now for Mortgage Simplicity.
Oh, like
you're
you're
still
so
gonna
we're
be
like
like your
owners.
team underneath.
For sure,
yes.
yes.
Okay.
so people can find you under either or, but you
Either
probably
or,
have more of like your
yeah, the
personal
Mortgage
brand.
Simplicity page will more so be for, the brokerage details, if you want to join, any things that we're participating in, and
A lot more lenders.
Yeah.
but your webinars and all that kind of stuff
will be on our
mostly
personal
still-
page.
Perfect, yes.
Yeah.
Webinars
Yeah.
from April and June, I hear amazing. I haven't been to one yet, but
Very educational.
yes,
Yes.
yeah, definitely check those
So
out,
what we
guys.
love to do is provide education. So.
Yes, well, we had our own little mini personal webinar. You guys gave me one, which was awesome.
Great. Well, I guess we'll just get started right away. Let's pretend that we have a first-time home buyer that is kind of just getting the inkling. Maybe it's a newly married couple that are kind of thinking about the process, but really don't know where to start. Lead us, what would you recommend?
I would say like it's never too early to start the process. You always want to start and get a pre-approval, even if it's a goal of yours to purchase a house, always start the process. It doesn't hurt at all.
So 5 years out.
It can be done.
Okay, yeah.
And of course, we are always willing to work with people. We know that transaction might not take place for some time, but we don't mind starting early because you need to make a plan. And in order to do that, you have to start the process.
Right.
So we'd start with a discovery call, kind of just see where you're at, if you have any savings, what your job is like, where you guys are thinking you want to buy, how much you want to buy for. So we kind of go through the mortgage pre-approval process and kind of collect all of their documents, which we can get into. But basically going through a mortgage pre-approval will help determine whether you have to, if your credit is good, we check that. If it's not, we'll help guide you and help you improve your credit to work towards that. We'll go through minimum down payment requirements, what you would need to purchase the purchase price that you want, like go over all that kind of stuff. So if you need to save a little bit more, you can. Sometimes debts are impeding people's purchasing power. So sometimes it makes more sense to maybe make towards paying off a car loan instead of saving more down payment, that kind of thing. So that's why it's always beneficial to go through the pre-approval process whenever you just know you want to buy a house, because we can go through all those things and help prepare you.
I'm so glad you touched on that, because I think that's the biggest question we get is people seem to think that they need to be ready before
Doing a
they
pre-approval.
get ready.
Yeah.
But
And to be honest, a lot of people think sometimes they don't think they're ready, and then they sit down with us and they're completely ready, and they're
Yes.
so surprised.
Yeah.
They're like, oh my gosh, I can go buy a house like tomorrow, and then they start looking like instantly because they're so excited. Even though when they came to us, they're like, we're not going to buy for like 2 years.
Well, a lot of people I think also think
Yeah.
they need so much more for
Yeah.
the down payment. Like a lot of people are believing that they need 20% to go in their
Yes.
first home, and
Yeah.
that's not the
So,
case.
yeah, there's just not a lot of education out there, which is why Jen and I always like to try to do webinars and stuff for people, but.
Why don't they teach it in high school?
I know.
You guys go to high
Oh,
school?
that's a whole nother
That's an
episode.
idea.
Next
Yes.
episode, tune in.
What we should teach our children in school versus what they actually learn. Okay, that's
Yes.
a whole nother day. Let us know if you want to hear that.
The minimum down payment, I'm sure everyone wants to know that. So minimum down payment is up to $500,000 purchase price. You're required to put 5% down. So $500,000 purchase price, 5% is $25,000 would be your down payment. Anything above $500,000, you need 10% of the difference. So for example, say you're to purchase a house for $600,000, you need 10% of the difference between $500,000 and $600,000, which is $100K. So that's $10,000. So then, and you still need the 5% of the $500,000.
So we're at
30
25 plus the
plus
10,
10,
so
so
35.
$35,000 in total.
They make it nice and easy, just like land
Yes.
transfer tax.
Yeah.
So there's also closing costs on top of your down payment, which we can get into too. But
Yeah, we'll dive into that.
that is your minimum
Up to.
up to. When you're purchasing with minimum down payment, you're also required to pay for mortgage insurance. It gets added onto your mortgage. You've probably heard of CMHC, their Sagen and Canada Guarantee. The premium gets added onto your mortgage and you pay it throughout your first term. You don't pay it out of pocket. The only thing you do pay out of pocket is 8% tax on the insurance premium, which is part of your closing costs, along with legals and land transfer tax, but we can get into that after. If you're ever purchasing for over $1 million, you need minimum 20% down always.
Now, do you see that a lot with first-time home buyers? Because I've had some myself.
Yeah.
So I could not
Well, with
believe what they qualified for as a first-time buyer.
Yeah, we are seeing a lot more. Some are getting like help from family,
Like
for down
source
payment
of
or stuff like
funds.
that. Or some
Yeah.
people just worked really hard and are doctors now, or like have really good, great paying jobs, and they've saved and
So like,
have,
they
like,
rent
their
it
own
or split their
savings,
home?
or they've
Maybe
had
they stayed at home,
maybe
yeah.
had
Yeah.
inheritance from
Yeah.
unfortunately someone passing away, but yeah.
So, sorry.
We're gonna do that a lot
All
today,
day
are we?
long.
What else is new? So what would you suggest to people? They're thinking they're ready to buy a home. They're gonna come to you guys to get your pre-approval. What should they not be doing between the time that they come and speak to you, between them?
Before they come and speak to us?
Like in the interim, they've already come to speak to you, guys are working on the process.
Make no financial decision, like big decisions, changing jobs or income. Now, it can be all right if they change jobs. But again, I guess speaking to us, touching base, keeping in contact. That way we can assure that nothing changes on their pre-approval, because pre-approvals are obviously rate dependent as well. So we will issue a pre-approval that will be good for approximately 120 days because we can secure rates based on that. So we reevaluate as we go. And obviously if rates go up, that can change your buying power. But yeah, making any big purchases like vehicles and stuff, obviously,
credit cards.
yes, credit cards, anything like that, any debt that you're going to incur will impact your qualifying. So, you know, if you have your pre-approval already, and we've had this discussion, realistically, any decisions you make with regards to your
You need their
finances,
permission.
you need to
We
call
always
us.
just, yeah, call us and everything, but it could be
Yes,
okay. We could say, absolutely, you can do that, but just run it with safer to run it faster.
Yeah,
Right.
so, you know, just staying in touch, I think, is key, because like it does take sometimes, you know, the better part of a year sometimes, even if you're pre-approved, to find that home that you're looking for. So yeah, I think it's staying in touch, and we do that as well. We stay in touch with our clients. We automatically relook at all pre-approvals that we've done when they're coming up to expiry if our clients have not purchased yet, just to make sure that everything is still kind of the same, and we kind of reevaluate. So we're also staying in touch, but yes, any big purchases, super important, any debt.
Okay, one thing I wanted to note too is about credit. What is good credit? Like, what is the guide here? Or if someone doesn't even have credit, I mean.
Yeah, so that's the whole process, like with starting a pre-approval, whether like, you know, right at the beginning, this will allow us to determine their credit standpoint. Do they have good credit? Do they have credit? Do they have bad credit? And if they have bad credit or no credit, okay, what are the steps that we need to take to get there?
Right.
Credit can be easily improved and corrected if it's bruised. And we can kind of give some pointers on how. And if they don't have credit, then they need to obtain credit. Most of our lenders like to see 2 revolving credit, you know, reporting to somebody, and usually for a duration of 2 years, so that they can see your repayment history and that you're managing it well.
There is
So-
exceptions sometimes.
Of course there is, yeah.
Always
But that's,
Well,
you know,
what is that when you're saying like they want to see the 2? What are the biggest ones that you'd like credit cards? What is it that they're looking for?
So revolving credit, and when we say revolving, it's something that, so a car loan is great, it's definitely credit that you're, it's reporting, you can see the payment history, but revolving credit is like a credit card or a line of credit, something that you can borrow and pay back repeatedly.
Right.
So that's what they're looking for, to see you managing that over
So
a
like a
duration
cell
of time.
phone wouldn't necessarily.
Cell phones do report and they're super important. A lot of people, we do see good credit and then you'll see late payments on a cell phone. So
Yeah.
because cell phones do report, so paying all your bills on time is key. When in doubt, at least your minimum payment, but and we always talk about credit being the utilization. So the amount of
That
credit.
was, sorry to interrupt. See?
Yeah.
But that is something that like I didn't learn until I really got into real estate, how
Yeah.
important the utilization is. It's not just paying off your credit card.
Well, and a lot
or
of
your
people
loan.
tend to favor, even myself, I will favor one credit card, maybe it's because of the points,
Right.
so we tend to use that one a lot. So say if you have a limit of $5,000 and you're making a big purchase and you've now maxed it out.
Mhm.
Credit cards report monthly when they issue the statement. And even if you pay that always on time and maybe in full, they're only ever reporting the statement balance and that you paid on time, not how much you paid. So that's why the utilization is super important, because if you're always using the max but paying it off, then it's looking like you're utilizing
You're broke. 'Cause
100%
you're maxing it out every
of your
month.
credit that's available. So we always advise our clients, try to either, if you need to utilize it all for a big purchase, maybe pay it before your statement, pay it down or pay it before the statement is issued. So that we're keeping like a 50% utilization
Right.
is key to a better credit score.
Awesome. See, something else I don't learn in high
Yeah,
school.
yeah.
I'm learning it today.
Your credit score too, so mostly on like the A side, so like for purchasing, they want to see your score to like 680 is good. There is exceptions sometimes for when you're like insured purchases, which means you're putting minimum down payment. For like 600 is a like okay score, but your credit score is calculated. I'll give you guys the breakdown because it's really helpful to know. So 35% of your score is calculated by missed payments. So any missed payments like highly impacts your credit score. And 30% is utilization. So like Jean was saying, you want to try to keep it 50% or lower. And 15% is the length of how long you've had your credit history for. So that's why we always try to say, like, sometimes people, if they've gotten to a lot of debt before or stuff like that, they want to just like close everything off. I'm like, no, don't do that. Just like, just don't use your credit card, get a credit, like hopefully your credit card doesn't have like an annual fee or anything.
Yeah.
But even if you just don't use it, it still builds your credit. You don't always have to be like spending on it.
Okay.
So like don't close your credits if you've had like credit cards if you've had them for a long time.
I mean, having more than one is good, sorry.
I was just gonna say, on that note, whenever you get those offers from the bank that miraculously show up when usually you're reaching your limit, that they're going to issue more credit to you, do you advise people to take those offers?
It would be circumstantial based. I mean, it depends. You have to be fairly it depends on the person, right? Like,
Yeah.
I mean, for myself, generally, like I would take an increase. It doesn't mean I'm going to now use that,
Right.
because again, that's going to help you with your utilization.
Your
If you
ratios.
need to have a bigger purchase and your limit's higher, now that bigger purchase still only represents 50% of the utilization. So it depends. But some people, even though may pay all the time, on time, might have, more of a incline to use the credit available because it's there and
Right.
therefore incurring more debt and impeding their buying power. So it depends, how
I would say
diligent.
if you know that you're spending like a certain, like some people max out their credit cards every month, like $3,000, and
Mhm.
they pay it off every month. I would say that if you know you're doing that and they ask you for an increase, yes, use the increase because
Yes.
it's always going to probably report that you're maxed out, even though you pay it off. Depending on when you pay it, it could be reporting to your credit bureau that you're like always using your max credit.
Right,
So-
and to your point, if that is the case and you don't have an increase coming, pay it off before the statement's due.
Yeah.
You can make a payment at any time, right? And you can also, like April was saying, having building credit doesn't always mean that you must use it. I explain this to my son actually quite often. He's like, no, I'm going to get a credit card and I'm going to use it and pay it off the minute I use it on the
Because that's
purchase.
the misconception.
It is a
Yeah.
misconception. It does have to be an active card, but you don't need to use it and pay it off because that is not the piece that is reporting.
Mhm.
Only if you're paying it on time and what the balance is on the statement. So everything that happens in between actually is not recorded on your credit bureau.
Mhm.
So,
So all those letters I keep getting in the mail, here's a credit card, I'm not gonna throw them out anymore, I'm gonna take them.
I don't know that I would take like 10 credit cards.
Yeah.
I mean, like to say 2, 3, I mean, look at your preferences, be choosy.
Because again, they're they're hitting your credit to get new cards or doing
Yeah.
things.
Yeah,
Right?
so
So like it's a catch-22.
And April will probably just go into like the portion that is impacted by
So
checking.
15% is like collections or bankruptcy or anything like that. So we definitely don't want to use that on your score either. Like you don't want to take anything to collections.
And that
again.
stays on for
Yeah.
7
That
years.
stays on, yeah. And there is exceptions, even if you've had like R9s, which means like you haven't paid and it's in collections. There is exceptions if there's like a reason, like you can still get approvals, but like it has to be a good you were in that situation and stuff, and it
Like
has to
us.
not
Yeah.
very recent, like
Yeah.
So yeah, and then 10% is number of inquiries. So a lot of people think checking your credit, like they're so scared. Like, you have like great credit, they're like, I don't want you to check my credit because they're so freaked out. But if you have great credit, us checking it isn't really going to impact your score at all, to be honest. And the advantage of using a broker too is we only have to check it once, and it's good for multiple institutions. But yeah,
We're gonna get
only
into that shortly.
only 10% of your score is calculated by number of inquiries. So of course you don't want to have like 40 people check your credit in 1 month, but even if you have a few, it's not really going to highly impact your score.
I learned
Yeah.
something new.
And then
Yeah.
also the reason why that's there and counts for some of your credit score is because are you credit seeking? So you're applying for a mortgage is one thing. So obviously you're gonna have to check your credit in order to determine your pre-qualifications. And anybody that looks at your credit bureau will see that. But say you have just gone last month and applied for 4 different car loans, and then you've gone and applied for 6 or 7 or 10 different credit cards.
Yeah. Red flag.
It's a red flag. Why is there, 30 inquiries in a short period of time?
Right.
So that's why that does play into like effect, because if you're credit seeking, there's a need for it, and then that does reflect in your score.
Right.
I've only seen that once, and it was recently. I had an applicant for a lease, and I was like, "What is this 18 pages?" And it was all within like the
Inquiries.
last 4 months
Mhm.
between cars and credit cards,
Mhm.
and it was very blatantly obvious.
Yeah.
You know, like there's an issue here. So that's a really good point.
Interesting. So typically if someone's trying to get into the market and they've decided that, yes, this is the route they want to go, there's a couple different options people can look at. They can go through the bank, and then you can also go through a mortgage broker such as yourselves. I have my personal opinions on that. I personally like the mortgage side, broker side, because I don't know that I've always gone through the bank, but I don't think that I've ever had this sort of information or hands-on help from my bank that I would from the mortgage brokers that I talk with. So if you're at that point, you're like, okay, now I'm ready to go and talk with a mortgage broker. What is it that you're going to be looking for from them when they come to you for that first conversation? What documentation, things like that? What are your first steps with them?
So a mortgage pre-approval process can be done a few different ways with June and I. We have like an online application links. People can fill it if they want, or we can just basically ask them for documentation and fill it out for them. Or we can help on a video meets, or they can come see us in person. But if you're employed, the documents that we normally ask for a mortgage pre-approval is your photo ID, last 2 years T4s, a recent pay stub, a job letter stating when you started your work, your position, your guaranteed hours or rate of pay, depending if they're salary or hourly based. And that's basically it for mortgage free, like income wise. And if you're self-employed, that's a little bit different depending on if you're incorporated or a sole proprietor. But June and I actually specialize in self-employed, like lots of self-employed programs too, because I was self-employed for 10 years before I became a broker. And so it's just like
It's a very tricky.
it's a little bit of a
Yeah.
it
You wish
holds a
you had
special
found
place in
someone
my
that
heart.
would- Yeah.
So
Yeah.
we like to help out that way. There's lots of different programs that way, but there is a bit more documentation involved. So we normally ask for photo ID, your last 2 years full tax returns, your T1 generals. If you're incorporated, sometimes we ask for your T2s, your financial statements, your articles of incorporation, your master business license. There also is some stated programs. So sometimes if that doesn't work, we'll ask you for 6 months of your bank statements to give you a little
Again, it
bit more
depends where
likely.
you fall, yeah.
But
Yeah.
But you obviously walk everybody
Again,
through.
yeah, we
Yeah.
kind of set the pace with a general amount of documents. The discovery call that we do with our clients will determine what documents we need to narrow it down, rather than send out a mass email like, if you're this, if you're that, if you're
Right,
this.
right,
So
yeah.
we kind of like having that initial call or email, whichever, or, Instagram it could be. However we connect initially, determine which document process to start the pre-approval of what documents we do require.
We always ask if you have children, if you get CCP income, because that's added income to your qualification too. Investment income, that's what we like to do, discovery call to figure all that out so we can get as many streams of income as possible.
So it really sounds like it's the same stuff that they would provide for a lease anyway.
Yeah.
So stuff that they have,
Yeah.
but that taxes being up to date are quite important.
Yes.
Yes.
You want to say something here?
Well, like, taxes should always be up to date.
Mr. Government, if
we
you're
do have
listening.
self-employed individuals, not always are filing on time. We do see that, or filing a little bit late. So there is programs that depending, like what we would call our Alt A or B side in mortgage products. Where some self-employed individuals, even though they haven't had couple credit, maybe you're self-employed, you're writing down your income to a lot less. So your, personal income is a lot lower. You might be leaving it in your corporation. There's a lot of different programs though that we can look at and we assess it on a, case by case basis. But sometimes there is programs for people who maybe are not quite up to date on their taxes, but are still can purchase a home. So
Okay.
So basically too, when we're looking at your mortgage pre-approval, it's basically we're looking at your income versus your debt ratios, and your debt isn't like your global limit, like not how much debt you're in, it's more of like minimum payments that you have to make is what we have to calculate. So that's why sometimes like if you have a truck payment that's like $800-900, it sometimes could affect you more than having like a $10,000 credit card limit or like balance, right? So that's kind of what we go through and that's how we figure it out. And it's also your pre-approval is based on property, but also property tax. So when we send out a pre-approval, it will say like your pre-approval is based on this amount of property taxes. We normally try to figure out, talk to the realtor, talk to them, see what area and kind of go with like the max we think it's going to be. But we always put in our pre-approval to make sure that the benefit of working with a broker, when you find a property that you want to offer on, just call or text us and we can let you know what your max purchase price is specifically on that specific listing, because no matter what property you are, the property taxes change, so your pre-approval amount is going to change reflecting that. So that's a big thing. And then in our pre-approval we also put that you must not incur any other debt or anything, or your pre-approval will change. Also, if you're looking at condos, condos are a little bit different because you have condo fees, so that will change your pre-approval too. So that's kind of like
country versus urban.
Yeah.
So what you're saying is a pre-approval is like a big vast bubble, but it's still.
we narrow down based
That's
on
what the
the search
financing
area the
conditions are
client's
for.
looking for, their purchase price, we know the region, and then if we know that the estimated purchase price and whether they're looking at condos versus, a freehold home, then we can determine, okay, what is the average amount of property taxes for this price point. So then that's how we issue our pre-approvals, and we let them know that, obviously if you're staying north of that, so if we've quoted you, a $600,000 purchase price with $3,500 annually for taxes, for the property taxes, and you're looking at a property that is around that purchase price, say like $589, and the property taxes are $3,200, well then there's no need to really reevaluate it because you already know that you're within the threshold of your pre-approval. Now, if you're looking at something that is at the top of your budget, but the taxes are higher than what we quoted, then we need to adjust it.
But also a lot of the time, if they are going under and we're in a multiple offer situation and they're already at their max, if they let us know, sometimes they can come up like $10,000 or $20,000 to go even higher if it's under. So that's what we like.
So we'll circle back on that point, because that's a big point, is the communication between us and you guys. And Sarah kind of prefaced the question, and obviously you're biased. And we're a little biased too, but bank versus broker, why people might choose to go one way and not the other, because I know from personal experience, so many people are like, oh, well, I've been with my bank for 20 years, I'm gonna go to them. And that may work, but.
So
What's your
biasly, I would say, why wouldn't you want to work with April and me? But at the same token, if we were to compare, one would be the relationship and the personal service, being available outside your regular banking hours, Friday 9 to 5. April and I care a lot, probably more than some of our clients do, about their own mortgage and their purchasing power. So we're there and we're always available to, help our clients. But also, you might have had a relationship with your bank for 20 years, but we do work with a lot of different institutions, including, some of the big banks and like Scotia and TD and credit unions.
That's
So
it.
we have access to multiple lenders and their products. And basically, you know, you come to us and we can evaluate all of the different products available to you, not just one.
Mhm.
The common thing we've heard often is people will get a pre-approval done at the bank, but it's not a thorough, what we call underwritten pre-approval, where they've really looked at the documents. They've taken your word for the income you're making. They may have not
Pre-qualification versus
correct,
the
you know,
pre-approval.
and then, you know, maybe they've missed some things along the way. I never want us to have a client where we miss something because something wasn't looked at. So
Right.
we look at it as if you're purchasing that very moment.
Right,
You know, with the exception of the property is not there.
right, right.
Right, but we estimate that part until they buy. So I think that that's a big deal.
I think a big part too is that we really care and try, and like we go down trying for any exception that we possibly can. Whereas the bank, like they're dealing with a million other things, and it's not their number one priority to get your mortgage defender to give you approved.
Yeah.
Like for example, we had a client a couple of weeks ago that were told that they would have to go B-side because they had a consumer proposal and before and stuff, and their consumer proposal was going to be 2 years discharged in a couple of months, and they were told for sure like they'd be B-side, lending fee, like a higher rate, and
20%
we were
down.
able to get an
Wow.
exception on the A side with a great rate, and they didn't have to go B side because we asked for that exception. Like, yeah, it's in their policy that they won't do it, but
they
if
were
you
so
ask,
close to.
if you ask for stuff, then sometimes you can. And I find
We're like the
another,
middleman.
I feel like
So it's more
another-
personalized service. You're like the realtors of mortgages. Like you guys are available all the time, offer presentations. This was a huge shift, I think, in COVID,
Yeah.
where brokers really kind of
Save
broke
the day.
out of the, like into the mainstream because of, you know, you're putting in an offer on a house at 9 o'clock on a Friday, your bank is not discussing with your
Yeah.
realtor how much you can go up.
And likely you will probably meet with somebody at your branch or at the bank you're going to, and that won't be the same person you see the next time.
Right.
So you're not building that relationship, and that person doesn't really know your circumstance 100%.
Mhm.
And
know,
products
when-
too, right? So if they're denied at the bank or they're given a really high rate at the bank, they might be able to come to a broker and shop for a
A
different
lot of people have
product where-
misconceptions. You only go to a broker if you have bad credit.
right?
Yeah.
I hear that so often. Oh,
Or
so
that you have to pay a fortune out of pocket.
Yeah, I was just gonna say that
That's
one.
the
Yeah,
other
that's
thing, we
another
don't
thing.
charge, yeah, like fees, like that
Fees.
there's a fee for it.
Yeah.
For example, you know, I mean, brokers are, mortgage brokers are allowed to charge a fee. It's called a broker fee. April and I do not charge a fee. I mean, we do what we call A lending, so your normal, regular qualifications, B, which is a little bit of alternative, like we discussed, and then even privates. Primarily, our client base is a business, but when the need arises, obviously there's the B and private side. We do charge private because we're not paid, but it's very minimal and a lot lower than what's out there
Right.
if we do have to do one. And other than that, though, our services are free.
Okay.
I was gonna say like a big point I didn't want to forget, for like banker versus broker, but also with realtors and stuff, especially in multiple offer situations, because Gina and I have pre-approved you, like have all your documents, everything ready to go. And because we've made great relationships with our lenders, we're able to do like quick COS, which help compete when you're in multiples and
What's
people-
COS?
Condition of financing. So
yeah.
yeah, when you're having condition of financing, most people will do it like 5 business days, but June and I sometimes can get it done in 1 or 2 or 3, depending on the person's situation. But a lot of the time, that person gets picked over everyone else because we're able to get
Yes.
their financing.
Yeah, yeah, you can
Yeah.
take that
I'm
time
sure your
on that
sellers
offer.
don't like to wait to know that it's sold firm, right?
Right.
So if they're getting a bunch of conditional offers and there's one that only has 1 or 2 days versus 5 days or, you know, longer,
Yeah.
then obviously that's a more desirable offer.
So
Right.
maybe this would be a good time to explain, because again, we're aiming this at first-time buyers who might not understand why. Well, hang on.
Yeah.
If I just came to you for a pre-approval,
Mhm.
why do I need a condition of finance?
So a lot of the times, especially when you're an insured purchase, so meaning you're putting less than 20% down, there's actually like 2 levels of approval that you have to go through. So the bank has to approve you as buyers, which we already know they will, but they also have to approve the property that you're purchasing, which is another reason why we asked our first-time home buyers to send us, or the realtor to send us the listing, so we can overlook it to make sure that we don't see any red flags with the property.
Those lovely
So-
listings that say asterisk, handyman special, that plan.
There is normally an appraisal appraisal that gets involved when you're purchasing, so they want to make sure that what you're purchasing your property for, it appraises at that value. Especially if you're only putting minimum down payment, there's not really any wiggle room there. So if your house appraises for $20,000 under purchase price, you'd have to come up with another $20,000 to buy that property. So that is another reason why you need a condition of financing. And when I was talking about 2 levels of approvals, you also have to be approved by the insurer. So insurers don't really look at your file at all until it's a live purchase. So it has to go through the bank, and then it also has to go through a second level of approval of an insurer. And there's only 3 insurers in Canada. So if all 3 of them don't like you as a borrower, you can't purchase that property. There's no.
So the pre-approval, you're like the gatekeeper being like, yes, I will let you through, but you still have to make sure the bank wants you.
Well, not so much
And
the
the
banks,
house.
like, yeah, we kind of know the lender guidelines and we know whether you're gonna fit or not, right? We wouldn't give out a pre-approval, just because.
Right.
But yes, I mean, there's always that what if, and the property plays a big part in it. I mean, most properties, yeah, sure, they're cookie cutter, they might be great, it's in a subdivision, you know, it's fairly new, there's not an issue. But I mean,
Our
lenders
area,
also
there's
look
a lot
at
of-
marketability. So if you're buying a property, your first time home buyer is a little bit rural, and say it's in an odd location, very close to like a lot of commercial property around it or stuff like that, it makes the marketability of that property less desirable. So sometimes lenders could say, or the insurer could say, we're not comfortable on this property. The borrowers are fine, and we would lend them on a different property, but this one, So it is important to have that little bit of a, even like we said, like a 1 day, 2 day condition of financing, just to kind of give you that extra time to make sure, because the last thing you want to do is purchase a property that you cannot mortgage.
Right.
Right. So, I mean, obviously the communication, the relationship that we have with the realtors and the client, we should be able to vet that ahead of time.
Right.
And that's why we say, send us a listing if the client's interested before we place an offer or on offer date. This gives us the opportunity to run it by, even sometimes our insurers, to say, hey, would you see a problem with this?
Yeah.
So then we know, okay, borrower's good, property seems great, go ahead,
Go ahead.
make
Right.
an offer, you know, so.
And that's generally something we should know, or at least have an inkling.
And that's a service you're never going to get from a bank representative. Maybe you will, maybe you won't, but, you know, who wants a maybe?
No, you're talking about
I want a
so
sure
much,
thing,
yeah,
right?
Yes, yes.
I
so
want
much
to
on
know
the
I'm
line.
gonna call someone and you know, in this day and age, people are impatient. If you don't pick up that phone, they're on to the next person.
Right.
It's essentially your biggest purchase of your life, and you should take it seriously.
Seriously,
Someone
yeah.
to be there with, like, handhold you through it.
Right.
Exactly.
Right.
We carry the stress, and you guys carry the stress for them, and then just pass on the good news.
Yeah, exactly, yes.
Okay, so we've gotten them pre-approved. They got all their documentation, they know how much savings they need to have, all that good stuff. Why is it so important, and can you guys explain some of the terms they're gonna hear and why it's not just rate that
That's
they need to
important.
focus on?
Yes.
Oh, you like this question?
I do, because over the years, I've seen certain things come up in mortgage products, like of clients who already have a mortgage, say they're selling, or maybe they're refinancing, and we're evaluating their situation. And you come across something in a mortgage, like, you know, a term in the mortgage, that's called a bona fide sale clause, for example. And to anybody else, they'd be like, well, what does that mean?
Yes, please.
It means that you cannot refinance your property or break that mortgage unless there is a bona fide sale. So if you're not selling that property and you're now back in COVID, interest rates have now just plummeted. They're 1.5%. Everybody wants to tap into their equity, make renovations, because that's what everybody did.
Yeah.
And they want to get an even better interest rate. So not only are they going to take that equity out, but they're going to, you know, reduce their monthly expenses on their mortgage because the interest rate's so much lower. Oh, you can't. So, you know, rate isn't everything. I mean, it does matter. But we look at, you know, what are the wants and needs of the client? What is their long-term goal? So we're there for you for this transaction, but also the life of whatever property you're purchasing and whatever mortgage product you have. So, you know, a mortgage rate is only as good going in as it is coming out.
Right.
And so, you know, fixed versus variable, do you have different penalties when you're breaking your mortgage?
So can we dive into
Yeah.
what is a fixed versus variable?
So a fixed rate mortgage is one where you have the same rate the entire term of your mortgage. So regardless of the amortization, you pick a term, whether it's a 1, 2, 3, 5 year term. 5 year is the most common that everybody talks about, and
Right.
what's usually advertised when you see rates.
Right.
So yeah, so that means that your interest rate for that, say, 5-year fixed rate term stays the same the entire time, and so does your payment.
So if you are like a meticulous planner and you don't like surprises and you just want your payment to be your payment, fixed is probably.
Yeah, a lot of first-time home buyers also pick fixed, they're working it into their budget. They don't want that to change. Having a variable rate mortgage is an interest rate that generally changes with Canada's prime rate.
Mhm.
So as the prime rate goes up or down, so does your interest rate and so does your payment. So it goes both ways. And so if you picked a variable rate mortgage, there's a few benefits. A lot of people that have taken mortgage products years after years might say they prefer and only ever take a variable. The benefit to a variable is a lot of the times the interest, what you have to pay exiting it if you break your term is generally a 3 months interest penalty. So, again, it's preference and we go over the difference, but if you know somebody is very money conscious, they're purchasing at the top end of their budget and, it's going to really affect them, probably fixed is better.
Right.
Because there's more than just your mortgage payment. Obviously, when you're purchasing a house, you have to consider,
Correct.
surprises, maintenance, insurance.
Exactly.
All
And
your other
actually,
bills.
in a lot of our seminars and webinars that we do, when we talk to first-time home buyers, we always discuss kind of like a little bit of financial planning, but in the sense of like, saving for those unexpected things that come up. One, save to own a home, right? Your down payment, but also after you own a home, you have to continue to keep to save because there is always unexpected costs associated with home ownership, right?
And
Furnace
properties don't
repair,
just keep their
maintenance.
value. If you don't maintain the property,
Exactly.
you're gonna lose value.
Yeah.
Exactly.
There is also another variable product called a static variable payment where your payment does stay the same. But then, so with prime that has gone up so much in the last year, like over 4%, people actually ended up being like a really negative amortization, like really, really long, because they've basically only been paying interest and no principal to their payments because it raised so much. So June and I never recommend going into that product to any of our clients, but some people liked it because it's kind of like a fix, their payment stays the same, and if they ever broke it, they only have a 3-month interest penalty, but we did see a lot of people in trouble with that specific product like recently.
Right. It works well if rates are dropping. but
Basically, your
not so
payment
much when they're
stays the
raising.
same.
Yeah.
So much like a fixed rate mortgage, your payment every month is the same, but it's still a variable product. What changes is the amount going to interest and principal as the variable rate changes.
Right.
So as we just saw, a huge hike in variable rate mortgages over the last year. If you were in that type of mortgage, you're basically your payment isn't even covering, in some cases, the interest component. So that's where your amortization is getting longer and you're getting into a situation that's really not great,
Right.
for anybody.
Yeah, right.
Not for the banks lending the money, not for,
No.
So-
So I find we like to just always go over like terms and products and where we see our clients and what their long-term goals are before we pick their specific product because it's a big deal and a lot of people don't realize even prepayment privileges that are in your mortgage. A prepayment privilege means most of our lenders allow 20% every year. So what that means is every year you're allowed to pay down 20% of your mortgage balance. It goes straight towards your principal and not towards interest. So a lot of people don't know about that, but we like to tell you so that you can take advantage of it. Even if you up your payments by like $100 bi-weekly, it saves you tons of interest in the end and will make your amortization a lot less. Your amortization is the length of your mortgage, of how long you're paying it for. So if you're an insured mortgage, meaning you're purchasing with minimum down payment, the max amortization that we're allowed to give you is 25 years. And when it's uninsured, meaning you have 20% down, you're purchasing for over $1 million, then we can go up to 30.
So when people are looking, like this is a lot of information for a first-time home buyer to come in, there's a lot of different products that are out there. There's a lot of different things that work best for whatever scenario. Talking to a mortgage broker, you're gonna sit down and go through that app with.
we're going to go
each
through it, but
person.
we're also not going to bombard them, right? Like we're talking about all different types of things here today, but knowing the client's wants, maybe not bombarding them with information they don't require.
Right.
That's not necessary, but giving them the facts that they do need to make an educated decision and not be overwhelmed by it.
Right.
Exactly.
Because it's supposed to be an exciting time, but it can also be a stressful time. So trying to make it as stress-free as possible and, let them understand everything at the same time, I think is what's key.
I think it's super important to ask questions. And if you don't understand, don't feel silly saying
Make
that
sense.
didn't make
No,
sense.
absolutely not.
Yeah.
Like I
Yes,
talk to mortgage
absolutely.
brokers every day and I'm like, what? Why did you just say that?
Yeah.
And
No,
yeah, you
silly
really break it down, yeah.
For sure.
So I think a lot of different aspects to look at. If you're going to summarize point just very quickly, you're gonna call a broker, you're going to go through the pre-qualifications, you're gonna look at the best products for you,
Mhm.
you're gonna find a house, they're gonna send it to you to make sure you can get approved from your insurers, all that jazz, and then hopefully you win an offer. So there's a lot of things, a lot of steps to go before actually buying a home.
It sounds overwhelming, but I really do feel like we make the process very simple and easy for the client. It, like I said, it sounds overwhelming when you lay it all out,
Right.
but one thing at a time.
Yeah.
It's
And
just
that's-
like life goes like
That's kind of the point that we wanted to put across today, though, was like, it sounds overwhelming, and it absolutely is.
Mhm.
But that's why I think I can speak for all three of us that we do prefer and recommend brokers to our clients, because there's a lot more handholding, there's a lot more explanation. But even just the fact of saying like, don't just focus on rate. There is so much more that you need to consider,
Yeah.
that you should be asking questions and making sure you go over those details with your broker
sure, yeah.
or your lender.
And I think too, the most important part about this seminar today was driving home that fact that, of course, the house shopping portion is the most fun part.
Yes.
But it's really, really important to back it up and start here first. So that's why we wanted to start with this topic and really take you from A to Z through the different parts of the seminar we're gonna do here, but I'm gonna cough, sorry.
And I think also,
That's-
yeah.
don't be scared to start as soon as possible. Like even if you're 19 years old and you're like, one day I'm gonna wanna have a home, what are my steps? Like I still have to go through college. What are there things I could be doing, like the credit building? before
Yeah,
you get
right,
there?
exactly.
Understand that, 'cause
And
you're not
nothing's
being
worse
funded.
than going out and looking, and what we get a lot is, I don't understand why I don't qualify for XYZ mortgage when I'm paying this much in rent right now.
Yes.
Right.
Yes.
But
Yes,
if you're
that is a big-
qualifying,
yes.
yeah, so it's, expectations, you might think, okay, and a lot of people will go online and do a quick calculation online and say, oh, with this interest rates, this is gonna be approximately, okay, then I'm gonna go look in a budget of $700,000 because the payment aligns with what I'm paying for rent and I know I can afford it.
Right.
Regardless whether you feel you can afford it
Right.
and what you actually qualify,
Are
they're-
two
they're
different
kind of
things.
different.
Yeah.
Or the opposite happens, you're looking at a budget, not finding anything because it's under what you were actually approved for. So both have happened. So, going out confidently knowing your budget and what that payment is. And sometimes people's budget is actually, like we pre-approve them for a lot higher than they're comfortable paying. So just because you can afford, a $950,000 property,
You don't have to.
doesn't mean you want to. You may not
Don't
be
do it.
comfortable with that cost monthly. And at the
Right.
end of the day, what it comes down to is your cash flow and your monthly expenses.
Yeah.
That's what
Well,
everybody
it's
cares about,
Always
right?
the unknowns that come and bite you in the
Yeah.
butt, like now I've got a furnace to pay for because it just.
Exactly.
Right,
So,
right.
and the lifestyles, certain people, they're not willing to,
Travel.
make exceptions to their lifestyle. So what does that entail? So again, finding out the specific needs and wants of somebody is key.
Right.
So above and beyond, just real quick before we wrap it up, because we're pretty much done, above and beyond their down payment, I know that lenders are usually looking for a specific kind of either percentage or amount for closing costs. So we haven't even touched on that. That's episode 3. We're gonna have a full rundown of
The
that whole
closing,
process.
the closing process, yeah.
But it is an important step 1 to understand that you need a little bit more than just your down
Down
payment.
Normally it's about 1.5% of your purchase price, but it's different per scenario. But that's why June and I, when we do pre-approval, we put all of the closing costs for your specific scenario in there so that there's no surprises, and we go through and walk you through it so that you understand, and there's something to reference back when you look at it, so you're like, oh yeah, this is what it's gonna cost.
Awesome.
Yeah,
Right.
perfect. All right, well, I think that really wraps up everything. And I mean, you can always reach out to us at any point if there was something that popped up and you're like, that didn't make sense. April and June are always available. You can follow them on their Instagram. You can contact any of us, Jessica, Sarah, Jacqueline. But I think in a nutshell, amazing conversation today. Love what we talked about. And for next month, we're going to be diving into, just the 3 of us, we're going to dive into what it is for the actual home shopping process. So now we've got our approval. We're going to actually start looking at homes. What are our steps through that? So tune in next month. I don't
We
remember
don't
the
have
date.
an official
Yeah.
date yet.
Don't have an official date. Follow along.
Yeah.
So yeah, we'll definitely connect with you guys there. And then if you have any questions, give us a shout. We're always available to help you out with anything. Behind the Sun Canada, thank you very much for joining in.
Thank
Thank you
ladies, for
so
coming
much
in.
for having
That was
us.
nice.
Thank you.
Thank you.
And we're always happy to answer any questions too. Like if you just want to send us a message on Instagram, we're happy to answer.
Yeah, and you guys are always doing webinars and seminars, so great things for you guys to join on and watch these ladies as they give you lots of brain fruit.
Wealth of information.
Brain fruit.
That works fruit for your brain.
Happy Wednesday, everyone. I hope you have
Yes.
a great day.
Thank you.
Thanks, guys.
Take
See you
care.
later.
So much.